welcome to Theo Trade. This is Don Kaufman, January 11th, 2021. About 20 minutes to go to the cash close here on this Monday afternoon. S&Ps are taking a hit, but that is largely being inflicted by just a handful of products. Of course, one of those being Tesla. That is something we specifically discussed on this past weekend's update is, well, literally that, the ability for Tesla specifically to damage the S&Ps and the NASDAQ. And, well, what a difference one trading session makes. Tesla right now is down by the tune of about 8%. But before I go any further, you can sit here and you can try to analyze Tesla pretty much until you're blue in the face. Come on, people, there's no levels, there's no fundamentals in here. So without trying to dig into any of the charts and any of the trade action here, what you do know is that Tesla's down to the tune of about 8%. And it looks like, Ken, coming into this cash close, could see some fairly heavy sell side activity. But that doesn't necessarily denote that it's over for Tesla, okay? And it very well may not necessarily be over for Tesla. People could look at this as a buying opportunity. Nevertheless, one of the things I wanted to take you into on this evening's video is, well, the sheer magnitude of the trade. I'm going to freeze the screen for a second, which is not something I typically like to do when the marketplace is open. But one thing that kind of stands in just really big time contrast to any of the trade that we've seen recently, the number of calls trading inside of Tesla versus the number of puts trading inside of Tesla. Okay, if you take a look at what we call the call sizzle and the put sizzle. And again, it's worth actually exploring this, not just at the end of the day, but on an intraday level if you are actually trading. One of the things that was a real standout in terms of trade here was the, well, the sheer magnitude, again, of the number of puts that traded versus calls. And you're like, wait, still more calls traded. In a lot of recent trading sessions, okay, you're getting 2 times the number of calls trading than puts and vice versa. But here today, you can actually see the call sizzle. Now, what the sizzle index is on Thinkorswim, it's today's option activity versus the previous 5 trading sessions. Today's call sizzle index is basically at like 0.8%, which is really, really light. The put sizzle, though, is just slightly over normal. And what it's actually saying to us is that, hey, lo and behold, people are trading puts in here. And they've actually backed off the accelerator of turning around and like buy calls. And there's one even more interesting thing here. And you start to look at like traded at the bid, okay, or below, or traded at the ask or above. And first of all, trading at the bid or below, trading at the ask or above, this is like retail traders just coming in here and doing market orders, which makes me nuts. Okay, traded at the bid or below, that number is considerably greater than traded at the ask or above. What that effectively means is that we have heavy sell side activity, okay, in the calls. They are selling, okay, calls. Now, it's not exactly like outpacing the number of calls by a huge margin that's being purchased, but it's enough. It's enough to see, again, definitive action inside of this marketplace. And what also is kind of a standout in here, the retail traders, okay, lo and behold, the trade and puts, right? They're out there traded at the ask or above. There are many more puts trading at the ask or above than traded at the bid or below, which is in effect what the marketplace is saying is that, and again, listen, professionals don't really trade at the ask or above. They don't trade at the bid or below. They don't just go out there and they're like, I'm going to do a market order. This is retail order flow. And it looks like retail right now, which is in very large part been driving Tesla, retail looks like right now they are selling calls and turning around to buy puts. And it's, again, it's pretty evident by looking specifically at some of the individual order flow. It's not too often I want to break down order flow to that depth and that dimension, but I think you have to inside of Tesla because Tesla is literally rocking the marketplace today, right? I mean, you look at the S&Ps, they're only down like 0.7, 0.8%. Like, this is not a hideous day in Tesla, but it's a bad day in Tesla. But what you have to understand about the marketplace right now, all right, outside of Tesla, okay, because we all know that Tesla is going to drag the S&Ps. And the S&Ps are getting dragged down again by the tune of 0.8%. The NASDAQ is actually getting hammered by double that, 1.6%. But here's the point that I want to make with it, okay? So what? Tesla's down. Great. But there's no correlation. In fact, you're looking at almost a 50-50 advanced decline line in terms of the S&P 100. There's actually a number of marquee stocks, number of marquee products, they're actually up on the trading day. So there's actually some support to the S&Ps, but it doesn't matter. They're still down like that 0.8%. And this is exactly the point that I was trying to make on the weekend update is you get a couple of down days inside of Tesla, and all of a sudden the marketplace starts to see sell side activity. But what has not occurred today, before you put your helmet on and get under your desk and start hiding and rocking back and forth, what has not happened today, the correlation coefficient hasn't kicked in. What that basically means, we're at a 50-50 advanced decline line. There's actually pockets of strength. Take a look. The financials. Listen, I'm short the financials. I don't mind saying it. I'm short the financials. I'm also short, which happens to be the home builders. Okay, the home builders. I'm short position in here. I can't believe this. When I look at it, the home builders are actually up. Why is that shocking? Because how many days in a row have the interest rates been up? Take a look at interest rates as well. The interest rates, they continue just to explode higher. I mean, it's an absolutely parabolic move to the upside of interest rates. It's just not impeding by any stretch of the imagination on the home builders. In fact, this is all of my accounts totaled, but I've got positions, as I said, got positions short in the home builders. I got a lot of short positions. I got positions here short, for instance, in the financials in a couple of different ways, shape, or form, and those are not necessarily selling off. I'll tell you what else isn't selling off. Look at underlyings like NVIDIA. Now, NVIDIA carries a very large market cap with it. It's up by the tune of almost 3%. Doesn't seem to matter. Again, the S&Ps are getting whacked back a little bit. The Russell is also hanging out pretty much the flat line. However, the Russell did see some volatility in very early trade. That volatility was to the upside. So I wanted to show you again that there's no correlation here. But again, the impact of Tesla is notable. The other aspect that has been weak throughout the course of today's trading session. All right, a little bit of a hit, okay, to Microsoft. When I say a little bit of a hit, negligible, okay? Apple, a blip on the radar, can't even see it on the chart. Facebook, all right, social's taking a little bit of a hit. So Facebook, you got me here. This one is seeing some pretty decent sell side activity. Amazon, oh, whatever, it's a 2% move. Google, 2% move. But this is a flash in a pan. I mean, it had 3 days that were straight up. I mean, a day that was like 4 and 5% moves to the upside. To see it back off just nominally, okay, is a nothing. So for the most part, the monsters of tech have a nothing day. You've got financials trading slightly up, and as we actually come into the cash close, the financials are on a tear to the upside. You've got the energy sector bid, you've got the housing sector bid, you've got things like Walmart and Target, right, which are consumer staples, they're bid up in here. Stocks like Intel, totally unimpeded in today's trading session. I mean, literally, when it comes down to it, big tech, Tesla, they're the only things that are actually getting whacked back right now. But again, the impact to the marketplace, well, it definitely damaged the NASDAQ to a degree. In fact, though, when you look at the NASDAQ, all right, that's not exactly a standout kind of candle. We gave up 1 day of gains in here. But I am going to show you a couple things that you should keep an eye on in just the days to come. I'm going to go back to something I talked about on the weekend update, the bonds. The bonds are falling apart. If you continue to see sell side activity in the bonds, eventually, okay, that 10-year interest rate, that TNX, this may snap the entire marketplace. Where the inflection point is, we don't know. But I can tell you one thing, if the bonds continue to see sell side activity, it can actually cave the entire marketplace in. The other aspect that really kind of resonates with me here, and there's a few of them, but one that really sticks with me, I actually believe that the dollar, okay, is functioning like a new volatility indication. And if you've looked at the last few trading sessions, specifically the last 3 trading sessions in the dollar, it's been straight up, and it's been straight up with some fairly extreme amounts of volatility. So if the dollar continues to see upside, it's almost like the professional trading world is preparing themselves for larger degrees of volatility. Last but not least on that particular front, volatility itself, and you can look at the volatility futures. The volatility futures, they are not inverted. Okay, I always look at like a little further out, something about like these 37-day vol futures, and to be really specific, here you go. There's the 37-day volatility futures, Feb vol futures, which are right here. They're trading at about 26. Then you jump out to like the March volatility futures, were 26.31. The vol skew has flattened out, okay, but it's still kind of, it's not totally inverted, which means that risk, okay, is definitely like, it's in kind of an inflection point. We're about to go over the falls, but nothing's actually happened yet. That's the way I would read into the volatility futures. However, at the exact same time, the VVIX has gone into Never Never Land again. 120 VVIX, people is starting to get a little bit more serious out there. So again, in the days to come. Obviously, Tesla is being felt throughout the entire marketplace. And one thing I want to reiterate again and again over here, Tesla, so it's inflicting damage across the marketplace, but that damage, okay, hasn't necessarily started to kick in correlation. And that would be something that you got to look for in the days to come. That if you see some sell side activity inside of Tesla, and then all of a sudden you see the advanced decline line start to peg where you have like 90 stocks or 95 stocks down, okay, then it's getting a little bit more serious out there. The other aspect, again, you want to keep in mind, of course, is the bond market. The bond markets have gotten downright dicey. Okay, the bonds trading under the 168 threshold gets serious, and at some point, the bond selling off, its interest rates flying higher, again, starts to actually snap the back specifically of the financials. The financials go, we all go. Look for it in the days to come. Again, the marketplace got a little bit volatile today, but most of that volatility is specific because of Tesla. Look for some of the correlation to possibly kick in the days to come. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.